everyone, and welcome to Stock Market Today. You have Alyssa Quorum and Justin Nielsen here. We're going to look at the major indexes, and we're also going to be highlighting a couple of stocks, Justin, including one leaderboard and one swing trader name.
Yeah, so we'll go ahead and start off on the leaderboard side with Wells Fargo, a little bit of a turnaround play there. Also, just one of the things we were talking about on IBD Live today is a little bit more strength in the cyclical. So we'll take a look at Cleveland Cliffs, and then we'll go ahead and finish it out with Amazon, something that hasn't been doing much lately, but is it time for it to come back up?
Looking forward to your insights on that one, Justin. And let's take a look at the NASDAQ here, down but off of the lows for the day, finishing down about 0.6%. The S&P 500 closing essentially flat for the day, just slightly lower. The Russell 2000 down 0.7%. And the Dow once again outperforming, reversing higher today, Justin, closing up 0.3%. So not a great open by any means, but it's looking like the NASDAQ, at least for now, is continuing to be pretty resilient.
Yeah, and again, this is the word that we keep on using for the NASDAQ composite is resilience. Every time it has a little flicker of weakness, it seems like buyers come back in and push the index back up near its highs. And even the pullback that we had just a few weeks ago back down to the 21-day moving average line was very short-lived and came right back from that. And again, we were expecting a little bit more of a pullback, or at least for it to stay down there for a little bit, but it seemed like it just came right back up, got extended again. And so we've been a little nervous. We've been, a little bit especially on IBD Live, we've been talking a lot about, is there rotation happening here? With the NASDAQ being at these highs, kind of a little bit extended from its moving averages. If you look at trend lines, any way you look at it, it's kind of extended from its norm. And when that happens, you do expect some type of pullback. Now, you don't want to jump the gun and get out too early necessarily, because a lot of times some of the best moves can happen late in the game. And so it's a really tough thing to time sometimes. But we are kind of looking at, are there other opportunities elsewhere from just the big tech? Are there ways that we can kind of lock in some gains, but still stay with some exposure to the stocks, so that we're able to participate if we should have what Ed has been calling a melt up lately.
Right. And speaking of looking for leadership elsewhere, bank stocks back on our radar. Wells Fargo moving up over 5% today, Justin. Some pretty heavy volume to boot here. So explain the mindset behind going with something like this. Clearly seeing some strength over the short term. So it looks like money is flowing back into these financial names.
Right. So, as the Treasury, the 10-year Treasury has increased the yield, you are starting to get those margins that are more favorable for the banks. So you've seen a lot of regional banks. You've seen a lot of the money center banks. I think you guys talked about JP Morgan yesterday. So now let's take a step back here, though. Let's go ahead and look at the weekly on Wells Fargo. And this is not our norm, right? This is something that has been not a great performer. But what you have to keep in mind is that there are, when Bill was putting together his model books, about 20 to 25% of them were turnaround plays. Now, when we're doing a turnaround play, we're not trying to get these at the bottom. It's really hard to catch a bottom on a stock, because there's always that potential that it can keep on going lower and lower. But once you've kind of made your bottom and you've shown strength, and you're back above that 200-day moving average line, in this case the 40-week line, and you're back above that 10-week line, or the 50-day moving line if you're looking at a daily chart, once you get back above those levels, and then you show basing action, well, you can kind of sometimes discount the overhead supply that is old, at this point. You kind of use that phrase, they either wear you out or scare you out. And when you've got all that overhead supply, and the way we kind of look at overhead supply is, look, there's all these people that have bought at this higher price that they're not happy, right? And so you expect, as the stock gets back to those prices, they're going to try and get out at, and recoup some of their losses. But if that's old enough, and 18 months is usually what we use, once it gets 18 months old, then it starts becoming less relevant. And that's something that can allow a bottoming base to work, especially if you have a catalyst. And in the case of Wells Fargo, not only do you have the Treasury yield increasing, but you also have this turnaround situation that a lot of people have been, kind of referring to in a big way. So I think there was someone on CNBC just today was talking about how the new CEO is really, finally getting that turnaround situation going with Wells Fargo. So when you've got a catalyst like that, and it's proven that it's able to kind of bounce back, and you're not trying to catch the bottom, but you're kind of getting it on that strength and the move back up, things like this can be back on our radar, even though they're still well off their all-time highs.
Very great explanation there, Justin. And it's showing up, that turnaround is showing up in the forward-looking estimates as well. So we'll keep tabs on that. And Cleveland Cliffs, CLF, also on our radar. This is in the mining group, which more and more of these names continuing to crop up on our radars. We were looking at this the other week as it cleared this downward sloping trend line, and it is now hitting its highest levels in a number of weeks here. And we have earnings a little over a week away, but potentially enough time to build a cushion, perhaps. What do you think?
Right. So the earnings, that is something to be aware of. So earnings are due on February 25th, before the market opens. So that means you've got to be out of there before that, right? Because you don't want to be necessarily sitting through something if you don't have a cushion. Now, if you bought at that earlier area, and this one was a little tricky because as soon as it started bouncing and looking like it was breaking that downtrend that you showed right there, it had a secondary offering, and that secondary offering knocked the stock down, quite a bit. But one of the things to kind of note here is look at how it closed. It did close well off its lows. That's what we saw in the market today. Whenever you see that, where it's kind of able to rally back off of its lows, close high in its trading range. Now, granted, the gap down was still, pretty large, but it's since then filled in that gap. And we're right back, taking out the near-term highs from just a week ago. So that's what's kind of looking interesting to me. And again, this is a group move. It's not like Cleveland Cliffs is out there by itself. You look at the group, and you've got others in there. We have Bale on Swing Trader. You look at some of the steel stocks. They're looking interesting. So there's a lot of activity in this space, and when you have the group move along with the strength in the stock, that kind of gives you some extra conviction that you might be onto something.
Yeah, group number 8 out of the 197 groups that IBD tracks. So that for sure is a signal there. And it's, as you mentioned, really great to peel beneath the surface and look at that action of other stocks in the group as well. Now, Amazon been sleeping on us a little bit, but is it perking back up, Justin? Shares gained 1.2% today, and this is a stock that has been consolidating for quite a while. Since last September, it was one of the stocks that came out of the ashes of those coronavirus lows.
Right.
Really, in the thick of that immediate need there for a lot of people in the early days of the pandemic. But again, since last September, Amazon hasn't really been doing a whole lot. So walk us through the thought process behind adding this perhaps as a short-term play, and maybe what it could turn into.
Yeah. So, remember what happened to the market in September. That is the last time that we got really extended. And the end of August, we kind of went at a quicker rate for a little while. We were extended above our 50-day moving average line, and then we got even more extended. So that's kind of a good example of why you don't try and get out too early. If you can kind of last through some of that strength at the end, you can have an even bigger move. But now switching back to Amazon, whereas the market came back, a lot of the stocks came back, and we had some really great moves, especially after our November 4th follow-through day. Amazon hasn't been participating. And now that does happen sometimes. And as a result, you see this dismal relative strength, that relative strength line, you see this dismal relative strength rating at 45. And, people would say, well, gosh, this is something that, Bill O'Neill, the chairman and founder of Investors Business Daily, would never touch. But I'd say that that's not necessarily the case. Back in 2010, I saw him play AutoZone. It had a relative strength rating of 27. It just hadn't participated in 2009, but it had this big long base, and when it came out, it was something that there was a rotation going in there. So if this has this months long base where it hasn't been participating, then it could potentially give you at least some short-term move, as it recovers back to its highs. And if that's the case, it could have some runway to go. And that's why we put it on Swing Trader at the end of the day today. So it's something that we're looking at. Just one more example of a stock that had some pretty low relative strength ratings when it broke out. Another A stock, Apple. Back in 2004, it was below 70 when it broke out of its perfect cup with handle, but it's another case where it just hadn't been participating in a very strong market. And as a result, when it did come out of that great pattern, and granted, they also had the catalyst, of course, they were coming out with the iMac, the iTunes, iPod, all of these innovations were, at the forefront back then in 2004 and beyond.
That's right. And resetting to today, I'm actually really impressed with myself that I was able to do the change date that quickly. That's
and I wasn't going slow for you, so that was some quick maneuvering on your part, Alex.
That's right. Well, Apple not looking too great right now, though. Maybe we'll check back in on that on IBD Live tomorrow morning. But a couple of other names just super quickly that remind me at least a little bit of what Amazon is doing. Some other leaders out of the coronavirus crash that have perked up after big bases. We have Microsoft as well as NVIDIA and Viva, of course, all different businesses, but and maybe they're in the early stages of some moves here. But Amazon, I'm glad that you put this back on our radar, Justin. As you mentioned, it was a swing trade today, and we'll have to see if there's a little bit of rotation back into some of these names. There's a lot going on in the market right now, and IBD is keeping everyone informed on the latest. We're staying flexible with all of this rotation that we're seeing and the potentially frothy market action. But Justin, what do you think is the main takeaway as we head into tomorrow's session?
Well, again, the main takeaway here is the resilience. The fact that we were able to come off the lows shows that, hey, look, this market might be, down at times, but it's not, it's not time to count it out yet. So be looking for those other opportunities, be flexible with that, and just keep on looking for those ideas, and make sure you have your exit strategy in place, because eventually the market will correct, the market will be pulling back in a more meaningful way. And whereas buying on the dips has been a strategy that's been working a lot lately, eventually, it's a great strategy that works until it doesn't. And when it doesn't, it can be a disaster. So you have to make sure that you have your lines in the sand, that you have your exit strategies, that look, if it starts going below this level, I'm out. No questions asked. I've got to protect myself, protect my profits, protect my capital. So that's going to be the name of the game here going forward. And as long as you have those in place, you can still participate in a meaningful way.
That's right. Some great advice to end on there, Justin. Really appreciate that. And thank you all for tuning in. The conversation is going to continue tomorrow morning on IBD Live. David Ryan was our special guest today. We are having more special guests frequently. So you never know when will we have the next special guest. Make sure you're tuning in to watch the great insights from all of our panelists and special guests. Investors.com/IBD Live if you haven't checked it out yet. We'll see you there tomorrow morning, and we'll see you right back here tomorrow after the close.